back home on the Lal Street, it was the 8th straight day of losses for the benchmark indices. The Nifty and the Sensex ended the day over 0.25% lower, with the Nifty at the 10,600 mark and the Sensex below 35,500. The broader markets, however, fared slightly better. The Nifty Bank ended flat with a slight bit of positive bias, while the mid-cap saw a mild outperformance. But that was about yesterday. As of today, the global cues are positive. Sonia joins in to tell us the market cues. Sonia, the global cues might be positive, but the Indian market's firmly in grip of the bears.
Yes, it is. In fact, it is a sell-on rally market, and a clear case was what took place yesterday, right? The market started off very well, but the Nifty lost about 135 points from the top. In fact, a large chunk of the selling pressure came from the pocket that has done the best so far, which is the IT space. So, you know, stocks like Infosys, TCS, etc. saw big delivery-based selling and contributed over 90% to the Nifty fall. The Nifty, as you said, ended in the red for the 8th consecutive session, and that 100 DMA of 10,686 now is very important. It continues to be a big resistance for the market on the upside. The FIs have also been selling for 7 consecutive days. Yesterday, FIs sold 800 crores in excess of that in the cash markets. Totally, they've sold almost 5,000 crores in the last 7 trading sessions alone. Brent crude continues to remain at a 2019 high of above $66 a barrel. So that's not good for us. And if you look at the India versus emerging market performance, that divergence has broadened. So in 2019 so far, the MSCI India index is now down 5%, while the emerging market index is up 7%, and Asia ex-Japan is up 7.5%. So whether it's political worries or, you know, terrorism concerns, etc., all of that put together has caused India to further underperform the emerging market space.
Okay, and Sonia, what about stocks in focus?
Well, as I said, you know, Ekta, a lot of the pressure yesterday came from the IT space. 90% of the Nifty fall was courtesy the tech stocks. We saw delivery selling of 300 crores in Infosys yesterday, 500 crores delivery selling in TCS, so keep an eye out on that. Saying that the disclosure of nil divergence is as per the guidelines of the regulator. So keep an eye out on Yes Bank. It could be volatile today. A lot of stocks hitting fresh 52-week lows in the auto space, names like JK Tyres, Bharat Forge. In the pharmaceutical space, Natco Pharma, all at fresh 52-week lows yesterday. Power companies are in focus. The government has allowed captive mines to sell 25% of their output in the open market. So we'll keep an eye out on some of them. GMR Infra is in talks to sell minority stake in their airport arm. So let's see whether that fructifies. And the ITI is in focus. It's a CNBC Awaaz exclusive, where the government will be offering tax breaks up to 2025 for electronic projects. So perhaps this could be one stock on our radar. But otherwise, just keep an eye out on some of the IT names. They were under a lot of pressure yesterday.
Well, yes, definitely, Sonia. We will keep an eye out on all those stocks. But it is time now to slip into a short break. Up next, opposition rule states oppose the video conferencing ahead of GST Council's. Get back with more details on that.